Hey guys, what's up? Alec back with the daily stock market, and look at that. On Friday we had a pretty flat day overall in the stock market. Not many stocks making much of a move. Most stocks making less than a 1% move, like Meta, Apple, Walmart. Now we are going to dive into earnings week this week. We had a few companies reporting. Earnings week is really winding down, so it is going to be slower this week. However, we do have a few that stand out, so make sure you stay throughout this entire video so you know who I'm targeting and looking at for earnings week coming up. Monday's a very slow day. Tuesday's when it starts picking up for earnings. We have Lululemon reporting after the close, and we also have Micron, two companies that I really want to have my eye on this week and are going to be standing out from the rest. Now, Wednesday, we also have Paychex reporting, another very interesting one. Wednesday is a very slow day for earnings. Moving over to Thursday morning, another very slow day. As you can see, earnings really is winding down. Thursday after the close, however, we have Skills reporting, which is going to be a very interesting one to be watching. We have Canoe reporting, and we also have EVGO. So those are really the 6 stocks that I'm going to be watching this week for earnings. Let's dive a little bit deeper into some of them. Now, if you watched my recent video on the best AI stocks in the stock market, you'll remember that Micron was one on the list and it was a favorite. However, we can see they're up 8% in the past week, 4% in the past month, 23% in the past 3 months, and they're down 21% in the last year. Right now, they are at a pretty fair value. If you take the last 5 years into consideration, we have them peaked out at around $97 per share. And the lowest point that we saw in the last 5 years was 2018, right around $30 per share. Currently, they're sitting at $61 per share, and the recent low was $49. Okay, so if we can pick up around $50 per share, or really under 55 is where I want to be loading the boat on Micron. Now, if you didn't catch my video about the best AI stocks, we went over some of this. They do a lot of different things, and we really dove into this about Micron technology, all the different segments of the business, which I really like Micron for that reason, because they're very diverse. Now, if we look at what the bulls are saying, we can see that Micron produces a diverse portfolio of memory products using DRAM and NAND that will benefit from a wide variety of growth opportunities across 5G, artificial intelligence, AI, cloud computing, and other areas, which should help mitigate sales volatility. Okay, so you can see this is not just an AI stock, but you're also getting a 5G stock, cloud computing, and other areas as well. So that's what I really like about Micron. The services they offer are very diverse. Also, the price to earnings ratio, or the PE ratio, is implying that right now at $60 per share, MU or Micron is an absolute steal compared to the rest of the S&P 500. It's only 11 right now, and the average S&P 500 is probably closer to around 23. Earnings preview: Micron Technology Q2 results unlikely to knock investors' socks off. So if Micron does end up dipping on their earnings, I'm going to swoop in and buy some shares. I'm hoping at least for Micron to fall 15% or more, just so I can buy some shares for long term. And I'm not saying that they're going to be falling just yet. Make sure you watch to the end of the segment to see which direction I think they're going to move. Micron is set to report its second quarter earnings on Tuesday after a shocker of a first quarter, which saw it post a 47% decline in sales to $4.1 billion and a $195 million net loss, down from a profit of $2.3 billion a year earlier. Another loss is expected. The Idaho headquartered firm is a specialist in memory chips and other chips as well, which are used in computing and smart mobile devices to store data, and its shares are all the way down from their highs too. The company's president and CEO flagged weakness in end markets as the key problem as customers started to wind down inventory from unsold product, and also possibly components too. All over and double ordered during the lockdown technology boom of 2020 to 2021, the analysts said. However, remember, we have the AI boom coming next, so they could be a benefactor off that. However, for this specific quarter, Q2 2023 is for a further quarterly dip in sales. Okay, we're expecting around 3.8 billion and a loss per share of 62 cents against a loss of share of 18 cents in Q1 and a profit of 2 billion just a year ago. So here we can see Micron is on a downtrend right now. So we really want to start to see those sales pick back up if we are going to be owning this stock for long term. So this earnings report, we could expect the stock to fall down a little bit. However, for long term, I think that Micron will bounce back and continue to trade near all-time highs once again. Now, Lululemon, let's go over them. They're at $313 per share, up 5.9% in the last week. And we can see in the last year, they haven't had much movement, only down around 1.7%. This has been a pretty stable stock because they're flat on the last 3 months. They're flat on the last 1 month, and they're also about flat on the last year. Okay. However, in the last 5 years, we see them up 290% overall with an all-time high of $473 per share. Now, if we scroll down, we can see that this is 3 times more overvalued if we look at the PE ratio as something like Micron, okay, based off the earnings that they're pulling in. They have a 34 PE ratio. Okay, they also have a 52-week low of $251 per share and a market cap of $41 billion. So this is a massive company to say the least. Now, some bullish things to keep in mind about Lululemon is often credited with the development of athleisure wear, which we believe is a major change in how people dress and has increasingly broad appeal. Lululemon has a big opportunity in Greater China, where the firm operates just over 100 stores. China is the second largest athletic apparel market in the world and has high growth. Lululemon online sales increased to 2.8 billion in 2021 from less than 100 million in 2010. We estimate its e-commerce operation margins at roughly 44%, about 20 percentage points better than its store margin, which is absolutely ridiculous. So we can see that why this stock is valued a little bit higher than MU, for example. They have huge margins. They have huge growth in recent years as well. So that PE ratio, larger PE ratio could be justified. However, if we look at some bearish points or some risks, the only acquisition in Lululemon's history, Mirror, failed to meet sales projections. Lululemon is now trying to make it part of a connected fitness strategy, but this plan is unproven. As Lululemon expands beyond yoga into categories like running and training and offers footwear, it competes directly with established athletic apparel firms like Nike, something to definitely think about. International growth from the company is an important part of Lululemon's Power 3 2x2 plan, but its expansion into Europe has been slow, and the brand is little known outside of North America. Now, it seems like a lot of analysts are bullish on Lululemon going into earnings. Here we see analysts expect Lulu to deliver better than expected guidance post Q4 earnings. Shares of Lululemon inched up Friday morning after top-rated Citi analyst Paul stated that he expects the athletic apparel retailer to deliver better than expected guidance. Lululemon is expected to announce its Q4 results next week. The analyst has reiterated a hold rating with a price target of $350 per share on the stock price, implying an upside potential of 12% at current levels. The analyst Paul expects Q4 earnings to be in line with expectations and is upbeat about growth prospects in China, which we were just talking about. Paul, the analyst, also said, with investors anticipating conservative full year 2023 guidance and shares trading at 16.5 times full year fiscal year 2023 EBITDA, well-known Nike at 25 times. We believe the setup into this point is favorable. We are opening a 30-day positive catalyst watch on Lululemon. And remember, we do see them pretty flat on the year, down 1.7%. So if we see a positive earnings on Lululemon, it could definitely skyrocket the stock into $325 per share to $330 per share or even higher. And the last one that we'll be talking about today is EVGO at $5.49 per share. Very, very cheap stock right now. Down 7% in the past month, up 34% in the past 3 months, down 58% in the past year, unfortunately, from their IPO price of $9.75 per share on November 20th, 2020. We see them down around 43% from that IPO price, and their all-time high, which we saw, was closer to $22 per share after all the hype from their IPO carried them a few months. It only lasted for about 3 months, shooting up 125% and then going on to fall down, down, down. So are they a good stock? We see they're a negative earning company with a market cap of $1.4 billion. 52-week low of $3.64 per share. If we scroll down, we can see some bullish, very few bullish things. EVGO offers exposure to growing adoption of electric vehicles. Okay, we'll go over some of this in some article, a better article here in a second. However, if we look at their earnings in the past, we can see that it's all over the place. Sometimes they surprise by a huge amount, and sometimes they sometimes they miss by a little amount. So it's a gamble on EVGO going into earnings. Keep that in mind. However, a quick article I want to go over with you guys. EV charging earnings signal cutthroat competition ahead. A week of EV charging earnings from the likes of ChargePoint, Wallbox, and Blink Charging offered a mixed bag in terms of prints. While the latter was able to exceed expectations and drive shares higher on earnings day, Blink, the former two, fell sharply on week 2023 forecasts, which was ChargePoint and Wallbox. However, on a similar note, across earnings presentations was the signal that competition is only due to heat up as EVs transitions continue to accelerate. And keep in mind, as Tesla announced that they're going to be opening up their charging networks to non-Tesla EVs, which is obviously going to crush things like ChargePoint and Blink. Therefore, personally, I'm not buying those stocks for long term at all. So a put on EVGO is looking like it's going to be the better move rather than compared to a call. However, remember, I did say this is somewhat of a gamble because they surprised on their earnings. They let down on their earnings. We also saw ChargePoint stock price fall. We saw Blink Charging go up on earnings. So it's definitely a gamble, crapshoot. But if I had to pick one way or the other, I'm probably going to be going with a put on EVGO for earnings. And if you guys want to stay in the loop with everything I'm doing, message me on Instagram to join in my Discord. I did say I would update you guys with the results from the GameStop call that we took out in the close friends and on the Discord. So on the Discord, we saw one of our students make over $10,000, 1,000% gains. We see some legends in our Discord that you can follow along with. We also have another student, another member of our Discord, up 1,800%, turning $31 into $600. Over a $569 gain from $31. Absolutely crazy on these calls. So if you're not in the Discord, if you're not in the close friends already, then you're missing out on money and you're just letting it go in thin air right now because everyone's talking about what they're doing, what they're jumping into the Discord. You're surrounded by like-minded individuals that are trading in the chat room nonstop with over 250 messages from students coming in at all hours of the day with live trading updates in our Discord main chat during trading hours. Now we've seen another student up 500%, $592. Another member up $3,000, 773%. Congratulations if you're in the Discord and if you're experiencing some of these gains. Another one with over 805%, a $1,300 gain, and that was from $150. Took $150 and turned it into $1,370 right there, Queen Bee. Okay. And the list goes on and on, all the results. If you want to see this tab, post your gains, you can see all the positive testimonials coming in. Here we see another member up 230% on the week. So if you want to join the winning team, make sure you message me here at the Daily Stock Market. Now 197,000 followers on Instagram, 717 posts. This is my only stock market Instagram. Make sure you click on success number 8, success number 7 if you want to see some of the recent positive testimonials as well. Other than that, thank you guys for all the love and support. Remember, as long as you keep liking these videos, I'm going to keep making them for you. Also, share this video with a friend if you think that they'll benefit from this video on earnings week. And if they're going to be playing earnings this week, make sure you share this video with them. Thank you guys. I'll see you guys in the next video. And remember, don't time the market, buy the market. Peace.